Welcome to the Oxen Group Nightly. My name is David Ristow. I'm the president, CEO, and founder of the Oxen Group. And the Oxen Group Nightly is a great way for you to catch up on the market, see what kind of current positions we're recommending here at the Oxen Group, and also get nice forecasts of upcoming days. Today, we're going to be talking about the market wrap up for today, how we did in the market today. We're looking at our position in Macy's, talking about our entry into, our recommended entry into a new position in Apple, other current positions we have recommended, long-term rating on General Motors are in our forecast for tomorrow. So let's start up with the market wrap up. Well, it was not a great day in the market, that's for sure. We were luckily out of most of our things. We had recommended exits on most of everything that we had from last week before this week. After we had signs that maybe the market was hitting a top, and I think a combination of overvaluation, unrest in Libya, and higher oil prices caused the market to slip and give up a lot of gains. Home prices dropped nearly 3% in December. Also came out today from the Case-Shiller index, and that definitely shows a threat of a possible double dip. And you also had weak earnings coming in from Walmart and Barnes & Noble, so that also did not help the market out at all. So the main crisis of the day, and was the catalyst for the market's pullback, was definitely what we have going on in Libya. And the crisis is basically that Muammar al-Gaddafi, the leader of Libya, basically will not relinquish power. And I think the Egyptian revolution and removal of Mubarak has inspired some Libyans to obviously believe that they deserve the same kind of ability to have a better government. And basically they've been protesting and violence has broken out in Libya. And basically the problem is that Gaddafi has basically signaled he will not relinquish his power. He does not think he should, and the revolt sort of has led a lot of maybe speculation that there may be these kind of consistent revolutions. There's a lot of dictators or leaders that have been around for a long time in some of these Middle Eastern countries, and there's fear right now from the market that those kind of revolutions may continue. And what that means is that we are going to see higher oil prices. And today, oil prices increased 6% on the news, as it could mean a possible revolution in probably the most important country of all, Iran. So keep your finger on that. We'll keep our finger on the pulse of that story and try and integrate that into our nightlies from now on to see what's going on. But I think what we saw in the market today is sort of that, okay, we priced in this issue throughout the day, but we saw a flat close right here, and I think that sort of meant okay, this is an issue, sure, and this affects the market. But at the same time, this is the American market, that's the Libyan country, and the two, while important to each other, are not as drastically connected besides oil prices. So market ended flat. It didn't pull back much more, and I think if there aren't really too many new developments going forward into tomorrow until something happens, either he doesn't relinquish power or he's usurped, I think the market's really not going to be too relatively influenced by that. The real problem with today was also that in correlation with that, we had just really bad earnings from Walmart, which didn't help a lot of the retail sector out, which was hurt probably also by higher gasoline prices. And then in addition to that, you had Barnes & Noble basically saying, we're not guiding forward for the rest of the year, and we're also not going to give out a dividend anymore after the Borders bankruptcy. So those two things played fear from the company news side of things. You had also the bad economic data coming out of the housing market, as home prices are showing that they may double dip after a 3% drop. And it's just overall nothing really good was on the plate, and you had a bunch of overvaluation from a lot of companies. So you saw the market giving up gains, but it really did flatten out. And unfortunately for us, we were able to get out of a lot of things, and also then use today as a buying opportunity. So what we did. So first off, we were holding a 20% position in Macy's going into today, and we were able to exit the last part of it at 23.70, despite the company beating EPS estimates by 0.07. this morning they guided slightly higher than expectations. Revenue estimates did miss, but the company basically was pretty bullish on the rest of the year, and they sounded pretty optimistic. They, were very excited about their ability to increase online sales, and they did say that cotton prices have increased, and they do expect maybe to raise prices slightly, but they don't expect it to kill their ability to do well this year. And that was a really bullish sign, and the market sold off the stock this morning more so on most likely just market following rather than actual fundamentals. And in my opinion, the fundamentals were really solid for the company, and I think that um, if we can get a neutral to even slight gain to tomorrow or in a day moving forward, that Macy's is going to be able to move up. And what's great about this position that we really liked about getting into it is the stock is in a real nice support area. It's a support and a resistance area. It's right in between, and at the end of the day, above, right at it, basically, it's the pivot point and it's Bollinger Band, the EMA there, and that ability to end right there means that the stock got that support right at the end of the day, finished the day at a support line. And I think that means that it didn't break through that support and that the stock was able to maintain it. You saw it did come down all the way close to 23, but never hit 23, never dropped below there. Dropped about 2% on the day, probably 1.5% overall, less than the market even dropped. And I think on a day moving forward that we're going to see this stock be able to rise, because I do think those earnings were exceptionally good, considering what we had seen from Nordstrom and what we had seen from other department stores. You also got, excuse me before I move on, we also got good earnings, I remembered, in after hours from Dillard's, and they also sounded pretty positive. So I think those are a combination factor will help out. Now, we also recommended getting into a position in Apple today, and we like this one because this is just a historical trend and a historical pattern of a great place to buy this stock. If you look at this on the RSI, this is a 6-month chart basically, and you see that the RSI barely ever dips below this really key 40 line. Okay, never has dipped below it. We're at 42.34 right now. We're at a moving average right there, getting support right at the moving average. It bounced off that support at the beginning of the day, trended up, drop back down to the support line towards the end of the day. And you can see the stochastics are showing that they are very close to a bottom. So we just saw this stock and we were just like, this is a perfect time to get into Apple. You see it's got 3 red days in a row. The stock rarely has more than 3 red days in a row. And typically when it has 3 red days in a row, you get 3 black days in a row. The only other time you had more than 3 red days in a row was here, but the stock has dropped so significantly that it filled that sort of same area when you have these 5, and that was completed by 2 basically black days in a row. You had this 3 here, and that was 4 black days in a row. So you see every time this stock dips on a consistent 3 to 4 day basis that it's going to rally back up, and that the stock has never moved below its moving average in the last 6 months. It's right there at it. I mean, this was a great support line, a great place to buy the stock, in our opinion. And the real news, the reason why the stock is dropping is basically a combination of, Jobs is out basically right now, and they don't know what's going to happen, and that story really hasn't broken, or nothing's been really reported, and there hasn't been really any good tech catalyst for them to rise, and so it's giving up some gains. But the investor conference is tomorrow, and we're hoping for good news from them. We're also supposed to get computer sales from the MPD research organization that we never did get today, and I think those numbers will also be very helpful for Apple. The only other current position that we're holding, or that we have a recommendation on, is Infinera, in which we have recommended quite some time ago, and are just waiting on for it to move back towards the 9 area. But we are looking to enter new positions tomorrow. We think that that has given a really good opportunity to pick up some shares after a nice pullback on some things that might be able to move into the end of the week. But if the market's going to look like it's going to continue down tomorrow, it might be a nice time to pick up a couple short sales. So we'll be looking to recommend one or the other. Finally, we have just a quick update on a long-term rating. We completed our analysis of General Motors on Friday, and we gave the company a buy rating with a price target of $52. And really, this story is basically the fact that we believe that this company can maintain pretty much a 4 to 6% growth rate on its operating income over the next 5 years per year. So 4 to 6% per year. And given that kind of growth, which is really not asking a whole lot from the company, just for them to work on their profitability as they're doing right now, continue to move into China and move into some new markets and build the kind of better cars that they're building right now, including their electric car, the Chevy Volt, that they can hit a price target of $52 very easily on a fair value estimate. And so we thought this was a great bargain at its current price, as the stock has shown a lot of resilience, the company has shown a lot of resilience, and they got earnings coming out this week. So that will really give a good indicator of what's going to happen with this company moving forward. So for tomorrow, it's really anybody's guess. I would love to say that I have an idea of what would happen. I think that, as we talked about earlier, the market flattening at the end of the day shows, that okay, we've priced the news in, we've priced the rise in oil in. Now where to? I don't know if anybody really knows. I think it's going to really determine on what's going to develop out of the Libya story, and can we get some other news that could maybe help to give a little bit of a catalyst to the upside, or could be a catalyst to the downside. And we do have a couple of things. We had weak earnings in Hewlett Packard overnight, and that was not good for the market at all. But we do have some bigger earnings, and some kind of earnings that are sector specific that could be important, including DirecTV, Lowe's, Toll Brothers, and I also know that I think Dollar Tree is on there, Cots is on there, so a couple of other companies that definitely have some influence in their sectors. We also have existing home sales on the economic calendar, and after a really weak news day from the homes sector, if that could get a little bit of a positive on that side, that could be a good sector boost for the home market, which could have some impact on the rest of the market. Well, that's going to do it for today. Visit us at www.theoxengroup.com. Email us anytime at contact@theoxengroup.com. Call us at 1-800-709-1160. We hope you'll be a part of 70% plus accuracy.